This is Mac OS Ken.
Apple Card likely needs a new backer. Evercore says never mind the Reuters report. And titles of note on Apple TV Plus. It is Wednesday, the 29th of November, 2023. I'm Ken Ray, and this is news from Mac OS Ken. Brought to you by yours truly and supported by people like you, patrons through Patreon. Find out more and add your support at patreon.com/MacOSKen. It seems the first shoe has finally actually dropped for dealings between Apple and Goldman Sachs. After months of rumor that the investment bank wanted out of its consumer banking initiatives with Apple, the Wall Street Journal says Apple is ending the partnership. Eventually. According to the report, the tech giant recently sent a proposal to Goldman Sachs to exit from the contract in the next roughly 12 to 15 months, according to people briefed on the matter. The exit would cover their entire consumer partnership, including the credit card the companies launched in 2019 and the savings account rolled out this year. If you're surprised, it kind of makes sense. The Journal says it was just over a year ago that the consumer banking partnership between the two was extended through 2029. That said, there were plenty of reasons to see this coming, starting with rumors earlier this year that Goldman wanted out of the deal. There are also the billions of dollars the firm has blown through trying to get a foothold in the consumer space. The question now, the other proverbial shoe. What's next for Apple Card and the other products? The Journal says it couldn't be learned whether Apple has already lined up a new issuer for the card. The piece points to reports that Goldman has had talks with American Express about taking over Apple Card, though Amex has reportedly had some misgivings, including over the card's loss rates. Synchrony Financial, the largest issuer of store credit cards in the U.S., is also said to be interested in taking on Apple Card. The piece says Synchrony, which originally bid against Goldman for the Apple credit card program, for years has been trying to position itself as an issuer with close ties to tech companies and counts Amazon and PayPal among its largest card partners. Let us wander through a few stories on iPhone sales and a kerfuffle around one in particular. Last week, Counterpoint Research put out a report on smartphone sales tied to China's online shopping event, Singles Day. According to the firm, smartphone sales grew 5% in the 2-week sales period around 11/11 versus the same 2 weeks a year earlier. Props in particular to Huawei, Xiaomi, and Honor. Their sales were up 66%, 28%, and 11%, respectively. Huawei has been the big star / point of worry in the China smartphone space, depending on your angle. The company sort of surprised the planet by hitting with the Mate 60 5G this fall. While Counterpoint expects Huawei to grow by more than half this year, that won't bring them close to pre-COVID levels, according to the firm. Still, they are set for a promising 2024. And what, in all of this, of Apple? Yeah, iPhone sales were down 4% in China for the 2 weeks around Singles Day this year versus last, according to Counterpoint. The way the firm sees it, the issue was supply, not demand. One Counterpoint analyst was quoted as saying, Apple is improving compared to last month, but there still seem to be hiccups in terms of supply. But considering last November's supply snafu was an anomaly, the year-on-year numbers could move into positive territory as current supply tightness normalizes. So read the Counterpoint release on Singles Day, and you've likely got no worries. Read the Reuters piece on Singles Day, and you might want to reach for the Bromo Seltzer. Before turning on the radio to listen to Jack Benny. I don't know, I'm like a 90-year-old man trapped in an 80-year-old man's body. Anyway, Reuters ran a piece under the headline, Apple sold fewer smartphones on Singles Day, lagging Chinese rivals. The Counterpoint headline, by the way, Singles Day growth boosts odds of China market smartphone recovery in the fourth quarter of 2023. Which one do you suppose is driven by clicks? It's not that the Reuters piece was incorrect. It even mentioned the supply constraints noted by Counterpoint. It mentioned those in the last 2 paragraphs of the 14-paragraph story, the first 2 paragraphs of which were about iPhone's drop and Huawei and Xiaomi's rise. Now, all of that brings us to a note posted Tuesday from Evercore analyst Amit Daryanani. Apple 3.0 ran part of the note, which sought to calm concerns among Apple investors around the Reuters report. The report has added to investor concerns around Huawei risk, wrote the analyst, but we continue to think this risk is overstated. Basically, he went back to the source, that being the Counterpoint release we started with. Pulling pertinent points, it is important to note that Huawei is growing off a much smaller base, which makes it easier to deliver higher percentage gains, and Apple remains supply constrained on the iPhone, so it is likely the 4% decline in unit sales was more a function of limited supply versus any meaningful share loss. Adding a couple of points of his own, Daryanani said both Huawei and Xiaomi offer lower-end smartphones, so looking at units can be misleading, as it is unclear how much of that growth came from the lower end of the market. Additionally, Huawei and Xiaomi were also aggressive with discounting and promotions, while Apple typically avoids that kind of behavior. Bottom line, he and his do not think the Singles Day sales estimate should drive any meaningful change in how investors think about the Huawei risk. If iPhone share in China went back to 2019 levels, it would represent a $23.6 billion revenue headwind, a scenario Daryanani and crew see as improbable. AdRock's got an outperform rating on Apple shares. His price target on the shares is $210. When the notoriously tech-avoidant Warren Buffett started buying Apple shares several years ago, a number of people assumed it wasn't Buffett making the investments, but Buffett's Berkshire Hathaway partner and lifelong friend Charlie Munger hitting the buy button. While that is not so, you can make the case, based on a piece from the Wall Street Journal, that without Munger, Buffett would never have made the move. Munger talked Buffett into buying See's candy shops in 1971. Over 40 years later, Buffett said, "This purchase ended my pursuit of cigar-butt investments, mediocre companies at bargain prices, and set me in pursuit of splendid businesses selling at reasonable prices. Charlie had been urging this course for some years, but I was a slow learner." Forget what you know about buying fair businesses at wonderful prices, Munger taught Buffett. Instead, buy wonderful businesses at fair prices. Quiet in public, reportedly talkative and amiable in private, Charlie Munger died Tuesday, the 28th of November. He was 99 years old. Coming soon to an Apple thing near you, some sort of software update. Mac Rumors ran a few pieces yesterday on the latest round of developer betas from Apple to developers. They include the 4th betas of iOS and iPadOS 17.2, macOS Sonoma 14.2, watchOS 10.2, and tvOS 17.2. While most of the unexpected newness has been found in the previous 3 rounds, a standalone piece from Mac Rumors has word of a couple of changes tied to notifications. According to that, the 4th beta of iOS 17.2, and presumably its iPad counterpart, gives users the ability to change the default notification alert. According to the report, under Sounds and Haptics, there's a new default alerts section that allows you to choose the sound used for all incoming notifications aside from texts, mail alerts, and calendar alerts, which already had customization options. For iOS specifically, the piece says there's also an option to change the default haptic feedback, Apple in iOS 17 changed the haptic alert, and now it can be changed back or customized for those who are not happy with the update. No word on when these updates will see official release, but the end of the year drawing near, though. Next week or the week after feel like safe bets. When we first heard about the Apple TV Plus docuseries, John Lennon, Murder Without a Trial, I wasn't sure I wanted to watch it. Now, having seen the trailer, I'm pretty sure I don't. The Cupertino streamer issued a press release Tuesday reintroducing the idea of the three-part series and announcing that trailer. According to the company, the docuseries is a deeply researched examination of Lennon's 1980 murder, which shocked and saddened the world. It seriously seems to be about the assassination, which I still remember. I mean, I was a little kid, but it was a big deal. And I'm not sure I want to spend 3 hours or so digging in that dirt. Then again, I'm not a true crime guy, and this is definitely built for that. According to the press release, the production was granted extensive Freedom of Information Act requests from the New York City Police Department, the Board of Parole, and the District Attorney's Office. It also talks to a witness to the shooting, a doorman at Lennon's building, the defense attorney for the guy who shot Lennon, and the psychiatrist who first assessed the shooter. It premieres on the 6th of December, 2 days before the 43rd anniversary of the assassination, which, no judgment on anybody who does want to watch it. Seriously, let me know how it is. If you want to take a peek, the trailer for John Lennon, Murder Without a Trial, is available now on YouTube. And finally today, something I will be watching is back, though I'm not going to watch it yet. 9 to 5 Max says the first 2 episodes of the 3rd season of the British spy drama Slow Horses have landed in the stream. I am completely mad for this show, and I am completely not watching it for a few weeks because binge. I have nothing like the patience to wait for the next episode once I start. I'll probably watch this like 2 3-hour movies or 1 6-hour movie depending on when I start. That is how much I love this show. I know, it's weird. I'm waiting for a few weeks because I don't have the patience to wait 1 week, week after week. I never said I didn't have my quirks. Anyway, if you can't wait and don't mind waiting, Slow Horses Season 3 has started its run on Apple TV+. macOS Ken, brought to you by me and supported by people like you, patrons through Patreon. Find out more and add your support at patreon.com/macOSKen. Advertising handled by Backbeat Media. Online at backbeatmedia.com. You can reach me a couple of ways. Info at macosken.com or call 716-780-4080. Until next time, that is news from macOS Ken. I'm Ken Ray.
Ciao.